Okay, Mark says, here's a potential item show and tell. Back testing. If I wanted to check how some stock behaves on earnings, what does Power Options offer? Or wondering if some position works well for stock. Yeah, straddles and strangles. That's what Ernie's developing right now with his product. All those other elaborate things, broken wing butterflies, all call, all put broken wing butterflies, reverse butterflies with the capped gains to the top and the bottom. I don't think they don't. I know some of them don't. But most of them don't work as well as earnings as actually just buying the straddle and strangle going into an earnings. However, I have the I only have 3 months of the historical here on the webinar account. On our other subscription, of course, goes several years back in time. So I think the easiest thing, Mark, for you to do if you wanted to use the historical tools to see how the options reacted around an earnings is you could just simply use the chain. Go back on a stock chart, your broker's chart, something along those lines, and write down the dates of the past 8 or 9 earnings, the last 2 years. Okay, and then we can just go into AAPL, and I don't know if it's going to do that, and I'll just go into the chain. Okay, so let's say I knew that earnings had happened on November 1st. So I'd probably go back to October and say, okay, what was I at on the 29th? Apple didn't have earnings on November 1st. I'm just throwing it out there as an example for Mark. So I'm going to select my date on the chain. I'm going to go back, in this case, to November 29th, and it shows me what all of the options are. And look, let's say I said it was going to be November 1st. Let's say I wanted to look at November 8th options. So I changed that there. There we go. So here are my options prices for November 8th, and there was a drop here. So let's say this was, let's say this was the earnings date, October 29th, Mark. I can say, okay, here's my 2% drop, not really too big, not really too small, $5.76. And then I go back the previous day. So I'm 550, 565 here with the 245 and so on, or when before the $5 drop would have been at 250 and 335. And where was I the day before? When the stock was at 249.07, I was at 550, 565, 675, 690. And then after the earnings, when the stock only fell 5 points, what would have happened? Well, the put would have gained the 4 or 5 points intrinsic, and the call would have effectively gone to zero, just with a little time values left. This wasn't an earnings, so that didn't just wipe it out completely. But that's how you would do it. Okay? If you have a strategy that you want to test long straddles around an earnings on the stock get the dates for the last 8 earnings. Then what I do is go to long straddle and I go to back test. You could do this with the iron butterflies. You could do this with the iron condors as well. You'd set up a filter to sort of say, I want to see iron condors on my stock that's, 85% probability below the short call and 85% probability above the short put in combination going into an earnings. How would I have performed? You set that up in your main search, and then you can go into search by symbol or the smart history, actually, if you put a stock. But I could just go into search by symbol for this example. Long straddles on a stock I know an earnings date. The historical date, October 20, let's say 5th, before that big move, and more results and AAPL. Okay. So it's going to take a minute, of course, and this isn't, the historical tools are pretty quick in that case. And in this case, they're not, because we're dumping all of the data down into the value there. Okay, it's doing all the data. All right. While I'm waiting for that, I'm just going to add something. Guy, I'm not getting you flustered here, but it's a good. What I'm trying to impress upon you is that same thing Sam chimed in. There is no free lunch. Every put you buy is going to have a risk unless you have an unrealized gain from the beginning. All right, so in our example, we showed the risks on the positions. Then if we went to that 110 strike on Qualcomm, it was only a 2% risk, but it's still going to carry some risk. Even if I went to the 140 strike, it's going to have a 0.2 or 0.3% risk. It's still going to be there. Okay. The only way that I can get bulletproof from the onset is if I had bought Qualcomm at, say, $75 a month and a half ago, and now it's trading at 88. Now I could buy a 90 put and I'd be in a completely bulletproof position, but I had the unprotected position before them. Okay. On October 25th, we have long straddles. Apple, is trading at 246.58. So 247.5 strike. That looks close enough. Call and put 0 days to expiration, 25th of October. Oh, come on. Why are you even showing me that? All right, let's go November 1st. Where's my 247.5 strike? Okay. It's not there. Okay, that's fine. I'm sorry, Mark. It's just let me go to the next one. Let me go to the 26th. No, 27th, 28th. Let's go to the 28th over the weekend from the 25th. I'm sorry. Okay, so our 1st of November expiration, or the 8th of November, stock at 249 at that time. All right, so if I took the 247, now these are the results here, Mark. I look at the 250, the 255, and what I'm going to do is just use this button here on my historical and click on Analyze Position. If this was the one I would have chose, that's the 252, I'm sorry. If this was the one I would have chose for 11 days to expiration, knowing there's that 5-point drop coming in, we'll click on Analyze Position from this view. What the Analyze Position shows me is a breakdown of that particular trade, the percentage profit and loss and the option gain and loss on every day for that position between now and expiration as I cross through earnings, if there was in fact an earnings in that time frame. Again, I apologize for the latency. The history is always tough to view at this time of day when we're dumping all of the end of the day data into the system. So it's going back, looking at every day over that trade and grabbing all of the numbers, calculating the prices at the end of the day, and there we go. So what does it show me? This 247.5 long straddle position opened on Apple on October 28th for the November 8th expiration. The highest return occurred on October 30th, which was 12% gain. The worst case scenario was the next day, 45.8% loss on the trade when it dipped down. This first graph here shows me the percentage return of the position based on what QQQ and SPX did. Something big. We did see that drop. That was that 4 or 5% drop we saw on Apple. Okay, and that took a big hit out of this straddle position. And down below you have your second graph, which shows you the actual prices of the call bid and the put bid. And if I could extend that back, we could see it. Let me try to refresh the page. Sometimes it doesn't draw the second. When I move the cursor first, it doesn't draw the second graph, so I can grab it as easily. There we go. So as we know, we started to see this put increase. And as we saw on 1030, that was our highest gain. The put was at 915, and here we are, $4.60 on the call, being dropped down from 680. That was, I'm sorry, the 5% drop. And the next day, something else drastic happened, and the put collapsed, and the call declined as well. And then the call started to shoot up, but the put effectively went to zero. So it looks like the sweet spot on this particular straddle was right here on 1030. That was that, what was it, 7 to 8% gain, or 12% gain. And then shortly after that, it's in weird range here between these two. It's in flux almost. And then the call starts to take over, but the put's gone to zero. Remember, the original cost in this position was $12.53. So even though your call's at $11, $11.50, put had gone to zero, so it's not countering that decline there. Okay? So 1030 was the biggest gain, and for some reason 1031 on Halloween was the biggest loss on Apple. I don't know if that was a volatility crush or something else. But that's how you can use these tools. Okay? Instead of searching earnings by earnings for a strategy, which doesn't sound like you're doing, meaning that you're not looking across the market to say what straddles match this base criteria that have earnings coming up in the next 10 days. Or you might be, and that's what I'd use the smart history for, not the search by symbol. So when I went back into back testing, I'm sorry, wrong view. When I went back into back testing, rather than select the search by symbol and then linking over to here, I would have done it in the other fashion. Okay, I would have gone to the smart history, run a save search, and then see how my results performed every cycle to see if this strategy is working. But if you have a stock and you know the dates, of those earnings, and of course the strategy, go into the strategy, click on backtest, and then you can go and search by symbol. Screen a few days or a week before the date you know the earnings are, see what options combinations would have met or matched your criteria, then see how they performed using that analyze position feature going forward. So you can see what the maximum return was in that time, the minimum return, and this actually helps you say, well, now that I know this, let me go maybe to the option chain. Let me see if something happened here where implied volatility did collapse. What happened here that caused this to go up from this price to where the two flipped, and it was a disastrous loss here, and then the call started to look really good, but the put started to look really terrible. Obviously, it's because the stock moved up, and that might have been the earnings there. That might have been the flux, but that's how it helps you. You can analyze those positions in that fashion going through, and then I use this too, this view, Mark, I use, and then I'll link to the option chain to say, okay, what happened here in the options data, implied volatility, change in delta, change in the stock price, what event was going on that I can see might have led me to a trigger point to avoid whatever this was in other positions where I have this strategy. What happened here that caused this? What common things do I see in this position? So I know that if it happens again in my next position in another stock even, I can potentially avoid that or use that as a trigger to get out of the position. I did a lot of that with the bull put credit spreads, and some of the training you've seen and the in-depth training that you haven't seen that's going into our bull put credit spread product. Last but not least there, of course, Mark, there is a discussion. There is a webinar. I think you've already gone through it probably, but in the webinars in the PowerOptions Tools section. So powerop.com/webinars.asp, that's our free webinars page, of course. And in our tools section, searching for card calls, historical suite of tools, backtesting options data. There's a full presentation there. I know it's 3 years old. My apologies. I know it's 4 years old, but it's the same content, 90% of what I would present today. What's missing from it is the specifics of what you asked for. Taking a stock, looking back across the last 2 years, 3 years of earnings, 8 or 12 dates, and saying, how would my strategy have worked if I'd opened them 5 days, 10 days before through the earnings? That's something a little bit more manual. Just get it from a stock chart or from your broker's trade releases. You can estimate the dates too if you just have the last 4, because they're all going to be around the same time, unless they had a delay, which would have messed with the stock too. Okay, so that's how I'd use the back testing tools in that scenario. All right, well, ladies and gentlemen, I think we covered everything there, including our last 2 questions that came in. I just want to go back here and, oh, sorry, folks. There we go. Just want to remind everyone that today's material are my thoughts on your questions designed for educational purpose, increasing options knowledge, avoiding risk, and hopefully enhancing performance as well. Any stocks or options discussed today should not be taken as direct trading suggestions. I'll be honest, I did almost open Qualcomm married put as one of the 2 married puts I opened on Tuesday during the end of the year special bonus webinars we were showing. I chose Yandex and Fabrinet, which we looked at on that blog just a moment ago. Not to say Qualcomm is a bad position, or I'm suggesting Qualcomm. If I did get into Qualcomm today, it would be in that married put structure. Probably as we saw the 92.5 or the 95, not the 90 that came up at the top of the search with the 8.4, 8.5% risk. Options do involve risk, even if we're using a protected strategy. There's no such thing as bulletproof from the beginning, no free lunch, as Sam said, and may not be suitable for all investors. But with a proper education, proper approach, proper control and position sizing, we can avoid the risks, still get the profits we want, and go forward. If you enjoyed some of the tools that you saw in this presentation today, or if you're watching it on the archive, the historical tools, for example, we took a little bit of look at the search, brief look at the portfolio tools, and more. But you can take a 14-day test run at any time. Just go to powerop.com, put in your name and email address, and then click the Start My Trial button. You'll have full access to all the tools for 14 days. No credit card needed. Subscriptions start at $45 per month after the trial period, with higher prices if you want more access to historical several years of data or real-time quotes as well. I already talked about the blog, blog.powerop.com, and especially blog.radioactivetrading.com to discuss why going deeper in the money with a married put for lower risk is not necessarily a path to get you to bulletproof faster. We like to stay in that wheelhouse there, that 4 to 8%. Of course, there's other education there. We sent the link to the webinars page, powerop.com/webinars.asp. I'm sorry I forgot to adjust this. There is a webinar next week at 4:30 p.m. Eastern Time. You can always check it out at YouTube as well. Okay. All right. Well, if you think of any last-minute questions later on this weekend, as I mentioned, I'm going to try to get some of the other videos shared with you from last Friday's discussion that I didn't post, plus a special treat for everyone posted up to YouTube and on our blog as well. But again, if you think of any other questions, send me an email at any time this weekend to support@powerop.com. You can also reach us at support@radioactivetrading.com if you have questions about the blueprint, the limited risk trading, the end of year offer for the blueprint, or more. Of course, you can also reach us during market hours, and I encourage trial members and subscribers to schedule a coaching session at any time. Oh, okay. I'm sorry. Sam just commented that he had a big move in RAD with in-the-money calls and even calling aggregates, did not buy puts, and the trades are nice profits. And those were straight earnings trades with the call, skewing it to one side, not worried about the straddle. Excellent. Excellent. That sounds great. Ladies and gentlemen, have a fantastic weekend. I will not see you online for a webinar before the holidays, so everyone have a Merry Christmas. I will see you right after Christmas on the 26th, but happy holidays there. Happy Christmas. Merry Christmas. We'll see you shortly after that, but you'll receive other information from me soon regarding those other 3 archived webinars, and probably on Sunday or maybe Monday morning, we'll get these webinars up as well. Plus that little treat I mentioned for you, something fun, I hope, for everyone. All right, take care, everyone. Have a fantastic weekend. We'll see you, and you'll hear from me soon. Let's see what we have next week. I'm looking forward to the 27th. We're going to review some of our top topics. I'm going to share with you what you guys have done for me, in a sense. I'm going to share with you the total minutes and hours of view numbers and views from our posted YouTube videos from Friday and other sessions there as well, so you get an idea of what you're a part of. And I look forward to that, and then we'll take your questions next Friday as well. Take care, everyone, again. Good night. We'll see you soon.